Hello, everyone, and welcome to another New Perspective, the podcast that brings you wisdoms and perspectives from all walks of life. Is get your kind of point of view on, mortgages and maybe help people understand the process of doing all of this. So myself, I built my first house back when I was 20 years old.
Wow.
But I was given the property from my dad, and it gave me some equity from the property, which let me get a loan, and then that's how I did that the first time. And then the second time when I moved to Washington State in Tacoma, I actually bought a house out there. And what was interesting about that process was that I actually sold the house 6 months prior to the 2008 crash.
Mm-hmm.
So I bought it just before that. But of course, we all know just before that, the loans weren't exactly done properly or legitimately.
Right.
So there's an interesting little story is that after I had moved away, a friend of mine who also used the same mortgage guy that I did, she goes, hey, check this newspaper article out. And she sent it to me, and it was he was the first guy prosecuted in the state of Washington for bad loans. So, and it was the guy that did my loan for me. And I remember sitting there with him, and he was like, oh, that number doesn't, let's just change this to that. And oh, do you have this? I was like, well, yeah, I have some of that. And he goes, well, okay, that's fine. We'll just use that as this, and we'll depreciate that. And it was this whole little, I felt now sitting back, looking back at it, I was like, it was very, seemed kind of gimmicky because it seemed too easy.
Sure. Well, a lot of times, it's been taught to us since we were little that buying a home is part of the American dream. Well, sometimes when you reach out to somebody, you may not understand if they're an unscrupulous person or not, and you're just thinking that they're going to do everything they can to help you get in the home, when in fact, really, they may have their own interests in mind ahead of yours and are really just curious and just want to get paid as quickly as possible. I was not in the industry back when all that happened. I tried to educate myself on the history of my industry. A lot of different loan types back then, stated income, and some of those are starting to circle back. Stated income, for those that don't know, is essentially no income documentation, no verification of the income. Just like the name alludes to, you're telling your loan officer, hey, I make X amount of dollars, and they're basing it off of that.
And they would just take your word for it. They wouldn't. They would just write the loan up oh, this guy must be honest. So let's just write it.
Yeah,
up.
I mean, there's a ton of different factors that went into it. I mean, there was certainly predatory lending going on. It seems like nowadays the consumers are taking a little bit more time and educating themselves on the process. But as far as I go, that's part of why I enjoy my career and love what I do, especially working with first-time home buyers, because I love educating them on the home buying process. Just a little bit about me, RobYo the Mortgage Pro. My name is Robert Jankowski. I'm with Advantage Lending and have marketed myself as RobYo the Mortgage Pro to continue to try and solidify a personal brand. But I'm a licensed residential loan officer throughout the entire state of North Carolina, so everywhere from the mountains to the coast, assisting people with purchasing as well as, right now with rates dropping a little bit with home refinances. It is one of, if not the biggest purchase someone's going to make in their life. So I don't treat it lightly. At the same token, kind of going back to what I said about educating yourself on the process, if we look back on something that we may only do once or twice in our life, how much time are we really going to devote to educating ourselves on that process, especially one that's constantly evolving, such as the mortgage industry? That's why I stress to my clients or anyone I speak to that you really need to make sure you're working with somebody who cares, who's emotionally invested, who wants the best for you, and preferably, in my opinion, local. I can't send out pre-approval letters that aren't valid, or, not answer someone's call or not be there for them, because that reputation will go around pretty quickly, as opposed to trying to go above and beyond for my clients, not working your typical banking hours, being a resource for them throughout the process, and going above and beyond. So at the end of the day, asking them for a referral. Yeah,
I can totally see where, you mentioned it being a major purchase or a major event in your life, because some people stay in the same house for 20, 30 years, and they might only buy one house their entire life.
Yeah.
And we think about, like, you just had a child, right?
Correct.
And you have another one on the way.
Yeah.
So those are two major events in your life that you're going to have one time, and situations happen where you have a child you didn't really plan for, but in the grand scheme of it, if you were to plan for the situation to happen, here's something that's going to now alter your life in some way. And I look at buying a house the same way. Like the two that I owned, really made a huge difference in my life. And I think there's the big piece that I see, knowing how to work on a house myself, where first-time home buyers, they go into this idea that, it's going to be cheaper because I don't have to pay as much as I do in rent to own this house. And they want to jump right into it and go, here's this thing I want to do, and like everybody else is doing it, and like the payments will be lower, so I'm going to buy this house. But they're not taking into account if the water heater blows up, or the roof goes bad, or something happens that now all that money you were saving or should be saving from not paying rent should have been going into the fact that now you need to spend $10,000 on a roof.
Correct. Yeah, I mean, there's certainly different avenues, for a roof, depending on if it's just due to old age or if there's been hail damage. You may be able to reach out to your insurance provider, see what your deductible is. Is it worth you filing a claim? Is it worth you trying to fix it yourself? Me personally, I'm not very handy, and I'm okay with admitting that. YouTube is one of my best friends in trying to fix stuff at the house. My wife gives me far more credit than I probably deserve.
I learned tons of stuff. Like when I moved to, I learned how to do plastic plumbing when I was in Ohio. I was taught my whole life as a child how to do, basic PVC plumbing. Mm-hmm. I went to Washington State, and everything out there is copper. And this guy asked me, he was like, "Hey, can you help me replumb my house or move this stuff around?" I was like, "Yeah, I can do some plumbing." And I get down there, and I was like, I have no idea how to do copper plumbing. So I went on YouTube, and sure enough, you find all these videos, and if you have any sort of mind, or creative mind, you're going, "Oh, I get it. Okay, that makes sense." And then you do it a few times, and all of a sudden, you're not a master at it, but
sure,
figure it out.
So, but for things that are beyond my scope, I actually have a home warranty. I pay for that home warranty. Generally you're looking around $500-600 a year. My hot water heater went. My house is 11 years old, so everything's going to kind of start getting ready to be on the tail end of its life. So the home warranty, it's a $75 service fee for the one particular that I have. And then they come out, diagnose the problem. If they're unable to fix it, then they will replace it. So some feedback I've heard is they will try to replace every piece on the item that isn't working before they'll give you a new one.
Prior to replacing it.
Right. But, there's avenues to help with that. And I can definitely agree with that statement, Joe. And I think some of that just comes down to the person themselves. Because, I could say that if someone's renting and they're not saving any money, and God forbid they have, they get in a car accident or just something goes on their car, they may not have the money to fix that, but I'll give you an example. I was speaking to a gentleman, and he was interested in getting pre-approved. Unfortunately, his roof actually did have, quite a bit of hail damage. And the cost, with the insurance company, he had a $2,000 deductible. Well, paying that really set him back, and unfortunately is going to, it caused him to miss a couple mortgage payments within the last 12 months, and that's going to prohibit him from buying a new home.
Okay, so this is the house he already owned.
Correct.
Okay.
And I'm not trying to be too brash here, but, in my personal opinion, if an event like that is going to set somebody back that far, coming out of pocket $2,000 to fix the roof, perhaps they shouldn't be buying a home, or perhaps he needs to stay where he's at instead of looking to increase his housing payment even more. I'm not, at the same token, I'm not here to tell people what they should and shouldn't do. I'm here to provide guidance and be a resource and answer any questions they may have.
But I think that's very important. I think there's enough people preying on those that are trying to just push somebody into a home, right? Is that, this is a big adventure. This is a big journey, a big milestone in your life. And I think we need to really focus more on people that are willing to give the care and give the attention to detail and the understanding of it, going, I know you really want to do this, and I know that, it means a lot to you to maybe change homes, and like maybe your family's growing and need a bigger home.
Mm-hmm.
But to really have someone to go, look, I'm not trying to push you away from this idea, but I'm trying to be very real with you and say, like, this, you might want to reconsider. Give it a year. Maybe get yourself back on track, put some effort into it, and go, where am I at in a year? And go, maybe I had a windfall, or maybe like, I got something figured out, or maybe it was something you told him.
Mm-hmm.
It was like, man, you're right. Like, I waited a year, I was able to buy a better house than I even thought I was going to buy the first time, based on your information.
Yeah, and oftentimes actually, when I speak to folks, they may not be ready to purchase right now. But we put a game plan in place for them. We've got plenty of tools available. If, for whatever reason they need some help with their credit, we can provide, excellent guidance from there. Or if, the debt to income is too high, for a particular program, we can discuss other options for them as well. So, that's just all part of my day-to-day stuff. I mean, I love what I do. Whether it's a gift or a curse, I get very emotionally invested in my files. Because as you said, we've kind of driven this point into the ground, but it's a huge moment in someone's life. It's so exciting for me to be a part of that. Like, I love attending my closings, and sometimes I don't get to meet a client face to face until I see them at the closing, because all the communication has been either over the phone or via email. Perhaps they're relocating in from out of state. So just seeing the smile and the joy on their face, especially some folks who, maybe we've been working on a game plan for the past 12 months, and now finally they're closing. And seeing the look, and just, they never thought they'd even be able to buy a home. And to just see the pure joy on their face just is my why. My clients are my why. And just it brings me joy seeing how appreciative they are and just how thankful they are. And, and I thank them, because the joy that I get out of it keeps me going. It's just one of the many things I love about my career. So
there was a quote I heard probably a couple of years ago now, and it took me. It's like one of those things you hear in such a twisted way that it takes a little bit to kind of process. And it was, we only keep what we give.
Yeah.
Right. And I was like, well, how do you keep what you give? Like, it doesn't make sense to me. And I was like, wait, because you give. Yeah, what you keep is the feeling, is the joy and the gratitude and this feeling of accomplishment that you've gained from helping another person.
Mm-hmm.
Right. And like that feeds into like what you just said, is like, that gives you that feeling. And now you got to keep that and take that with you. And then what I feel it does it with, even with what I do, is that it helps me it helps me treat the next person that much better.
Yeah.
Right. It's like this cycle of like, it builds, right? Like, man, I felt really good about doing that for you, that I want to do it even better the next time. Kind
of like, it's a similar way of paying it forward.
Yeah.
You put
absolutely.
Good karma out there, good energy out there, it'll come back to you. Some of the other items, as far as, when you and I were discussing about doing this, you mentioned about kind of going through a little bit of the process. Now, obviously, from a lending standpoint, I may be a little biased. And to be frank, there's no shows on HGTV about loan officers. Mm-hmm. It's all about the realtor, the real estate agents. That's the sexy part of the transaction. The money isn't necessarily. However, the first step people generally do is they just look online. They're looking on, whether it be Zillow, Realtor.com, a plethora of different sites. So if someone sees a property and they're like, wow, I really like that, I want to put an offer in. Okay, well, in order to put an offer in, you got to submit a pre-approval letter. So have you even spoken to a lender at that point? Speaking to a lender has to be your first move. Otherwise, how do you even know what your budget is? How do you know how much money you're going to need? How do you know what your payment's going to be? How do you know if a USDA program with no money down, is that going to be better than going conventional and putting 5% down? You don't know until you go through and you have these conversations with your local mortgage expert and, asking the right questions. There's a cliche, in real estate saying that home you looked at today that you wanted to sleep on and put an offer in tomorrow, somebody looked at yesterday, slept on it last night, and put an offer in today. Especially in today's market. It is a very aggressive seller's market. So you have to have your ducks in a row.
I actually had that experience because it was like about a little over a year ago, I think. I was looking at houses. No, actually, geez, like time goes really fast. It was a few years ago already. And it was like that. Hey, I want to check this house out. And there would be 10 people there already. Or, there was somebody that would go, well, we're going to buy it in cash. Where I still had to do all the lending pieces of it. And they're like, well, we're just going to take the cash. And I was like, all right. So like, it was this battle of like, could I get an offer in quick enough? Was it the right offer? Did I have the right variation between cash and loan or down payment or like, is it the due diligence, right? Like there was all these pieces that because I did it 2 other ways before, I don't think I even realized how much went into the actual process of it. And I think that's very important for people to know.
And it does change, just back in October of 2016 or 2015. But TRID was implemented, some disclosures that have been around for a long time, no longer existent and been replaced by some other ones. And, different time restraints for disclosures. There's all kinds of things that are going to change that. But, if once you speak with your loan officer, the application itself can literally take a matter of minutes. For me personally, it'll take me 10 minutes to knock out over the phone, maybe less, depending on questions some may have. It's going to consist of your name, social, date of birth, 2-year residence history, 2-year employment history, income, assets, and some government monitoring questions sprinkled in. It's really not as treacherous as people think. Once we have the application, that's going to actually tell us a lot. We're going to know what we're looking at as far as debt to income, what the budget needs to be, what that is in relation to your payment, because there's a lot of third parties out there. And, Zillow, for example, they give you an estimated payment. Well, one thing they don't mention in that estimated payment, so there's a few assumptions. They assume you've got 800 credit scores. They assume you're putting 20% down. Those are 2 huge variables right there.
Yeah, absolutely. That would change a lot, because 20% down, that's a huge chunk of money that people aren't really realizing. They're seeing that like, well, I'm paying $1,200 a month rent right now, and this estimated payment's only like $699 or $675, and I'm like, I can totally buy that. Yep. But you're not counting in like the homeowner's insurance, you're not counting in, taxes, you're not counting in all these things that, it takes that $675, or if you have a lower credit score, all of a sudden, that now it's bumped up a little bit more, you have a higher interest rate, and then you have like, or you only put 5% down, or maybe you can only put, maybe you're doing a VA loan, I think it's like 0% down, right? So it's not 675 anymore.
Correct. Yeah, and I mean, there's just so many variables that, and nothing against people, because as I said earlier, why are you going to spend hours and hours educating yourself on this process you're going to do once or twice in your life? And then when you do take the time to start doing some research online, as I'm sure neither you or I are surprised, there can be a lot of conflicting information online.
Yeah, what's even true online?
Right.
Because it's all like, here, buy my stuff, and like you can spin it however you want to get someone to click on your product. Mm-hmm. But are you really selling that product, or are you just, is it clickbait, or is it, what's real or not?
Correct. Yeah, I'm trying not to name any particular competitors, but some may have a really large marketing budget, and they have really hilarious commercials, and they got really slick apps and all this and that. All those costs are going to be allocated somewhere.
Yeah,
and they're generally
you got to pay for them somehow.
Yeah, they're generally reflected in their rates. So it's an old sales adage: everyone wants something cheap, fast, and easy. You're not getting all 3. I don't care who tells you are. Yeah. But you can get 2 out of the 3. If you want it cheap and easy, it's not going to be fast. Yeah. If you want it fast and cheap, it's not going to be easy. So go through the options. But again, this is just stuff that you talk through with your loan officer, trying to figure out what mortgage is best suited to fit your needs. Now, having these conversations early on prevents a lot of surprises down the road. It's maybe a little bit corny, but something that's always resonated with me is the 5 Ps. Proper planning prevents poor performance. The more groundwork we lay up front, the more streamlined the process is once you're under contract. So for me, my personal preference, I may ask for a little bit more documentation up front than most speaking with some other folks in the industry, it seems like some of them are a little bit scared to rock the boat. They don't want to ask the borrowers for much. I don't see the harm in that. This is what we're here to do.
Right.
I want to set you up for success.
No, exactly. It's a business transaction start off, but it's also, you want to make sure they have the information they have, and why waste everybody's time? It's wasting your time and it's wasting their time, and you're getting their hopes up. That you're going, oh yeah, based on the small amount of data you gave me, we can get you into this. But you can go, based on the large amount of data you gave me up front, I can be more secure in saying that here's the better route based on what you have, right? So I can see where, really having the extra information up front would make a huge difference, making sure they can make a credible decision, a big decision of their life.
Sure. No, absolutely. And for me, it comes down to asking the right questions as well. Like when we get to income, are you straight salaried? Are you paid hourly? What's your rate? Are you averaging 40 hours? Or do you have overtime? Or sometimes, I'll have someone complete an application online, and unbeknownst to them, they gave me the net figures for their income. When in all actuality, for qualifying, we use the gross figures.
That's a big difference.
Huge difference.
Yeah.
Now, maybe if it's someone who's self-employed, different story. I'm going to have to review some tax returns. The calculations for the income differ for self-employed borrowers. But a lot of times people don't even know this until they've already gone. They see a property. Oh, 123 Main Street. I'm ready to put an offer in. Okay, have you spoken with the lender? No, not yet. All right, well, give my guy Rob a call. I call them, and they're not ready. Or they say, hey, Rob, I'm self-employed, but my business grossed $250,000 this year. Well, as I mentioned, normally we go by gross. With self-employed, it's different. It's the net for self-employed borrowers. So, yes, Joe Smith, who's wanting to buy 123 Main Street, his business might have grossed $250,000, but after all of his write-offs, he net $50,000. And that 50 is what we can use to qualify him on. Okay. He's not too happy with me at that point, but the fact of the matter is he didn't lay the groundwork and know this ahead of time. So now he's upset because he can't put an offer in on this home because he thought he'd be able to qualify no problem.
Yeah, I can see where a lot of times it can be, we have this consumerism mindset where we can go to the store and I see what I want. Mm-hmm. I'm like, oh, I have just enough money in my account. I have $100. The product's $75 plus tax. Got it. I can buy it. I see it, buy it, done.
Yeah.
Right? But you're buying real estate, right? It's not wham, bam, thank you, ma'am. It's like, I want that house. How do I do it? Here, well, just write me a check. But even if you have the cash, it's still not a quick deal. It's not like walking into the store and buying a house.
Yeah, that's we could probably eat up a whole nother hour talking about that, and that's probably more not necessarily a generational thing, but a human condition of people who feel that owning a house is a right as opposed to a privilege. So, you just have to make sure, unfortunately, it's rare that I'll get a call from somebody and say, hey, listen, I'm looking to buy a house within the next year. And some loan officers may say, why am I talking to you now, for 12 months from now? That's refreshing to me. This is somebody who knows that this is a process. Maybe they've got some things to work on, and they've got ample time, so let's lay the groundwork now. Yeah, your credit's not bad at all. But if we got 12 months, we can get it even better for you and get you better terms when the time comes and you're ready to pull the trigger.
Right. And then you're earning their respect by actually nurturing the relationship for 12 months too.
Yeah.
You're going, oh, I don't want you because you're not going to buy in the next 90 days.
Right.
Or 60 days or whatever. So if you work with them, like, hey, where are you at right now? Like, okay, so I got this. Here's where we're at. Here's what I've been working on. Here's the savings I have now. Here's this. And you're culminating, you're building this thing up over 12 months. And now when it comes time to pull the trigger, you're like, man, like we have look what we did.
Sure.
Right. We built this thing, and now when this delayed gratification of 12 months, and they walk into this house that's way more house than they ever dreamed of, because what they were looking at 12 months ago, like they couldn't afford anything that was, what they really wanted. They were just trying to get a house. Mm-hmm. But 12 months later, they might go, wow, because I did all this, and I spent the time doing it, and I earned it.
Yeah.
Right? And now I bought a house, like way more house than I ever thought I would ever have.
One topic I wanted to touch on too, because it's with first-time home buyers. I'm sure this kind of comes as no surprise, but one hurdle that we're seeing more often than not is student loan debt. So a lot of times people think because their student loans may be in deferment, so they're not having to currently pay on them, that they're not going to impact them buying a home. Unfortunately, that couldn't be further from the truth. So the different loan program guidelines pertaining to student loans vary a little bit, VA being the most lenient with it, which as it should be, I suppose. But generally, most of the loan programs, if it's anything other than a fixed, fully amortized payment, so meaning if it's on income-based repayment, if it's in deferment, if it's in forbearance, they don't care. Student loan debt's the only debt you can't get rid of. You can't even include it in a bankruptcy. So they have to count a certain percentage toward the debt to income. So for example, with someone who may have $100,000 in student loan debt, we have to count 1% of the total balance toward the debt to income. So in that example, we're talking another $1,000 a month I got to hit them for on their debt to income.
Oh, wow, that's true.
That's a huge game changer.
Yeah, that changes a lot, because that could be not 8%.
That's a mortgage payment.
That's a mortgage payment, exactly.
On a smaller home, that's $1,000 a month. You buy a home, and that's your mortgage. So yeah. It's definitely a pain point for many. But furthermore, once we go through the application process and you are actually officially pre-approved, from there you're ready to start shopping. There you've got your letter. You see a house and you want to pull the trigger and put an offer in on it, you've got your letter. For me personally, I actually don't put the amount my clients are pre-approved for on the letter. When I issue it, I do include the amount in the body of the email, as well as copying the real estate agent on it, so they're kept in the loop as well. But I don't put the amount on it specifically because I don't want my clients to lose leverage. If I put, Joe Smith is approved for $500,000, but he is interested in purchasing a home at $300,000, I would hope, but in this day and age cannot assume that everyone is going to be, honest and conduct their business with integrity. So I don't want somebody being like, well, Mr. Smith, we do have multiple offers on this property. I see you're approved for quite a bit more, and I think if you increased your offer, it might help get the job done. We're losing leverage. We're showing our hand.
Absolutely.
So that's why I don't put the amount on there. But so once your offer is accepted, you and the seller have agreed to terms. Oftentimes the real estate agents are the ones negotiating on your behalf. That's when the fun starts. That's when we're looking to lock in your interest rate. That's when we are issuing disclosures. I've, in this meantime, been gathering documentation. The basics are your driver's license, 30 days of pay stubs, 60 days of bank statements, 2 years of tax returns, 2 years of W-2s. That's the gist of it. Once I have those items on top of those disclosures back when we're under contract, that constitutes a file that's ready to be submitted. So when I say submitted, I send it into my processing team. They're ordering the title work from the attorney. They're reaching out to the insurance agent for the declarations page. We're getting the appraisal ordered. The clock's ticking. Once we got that contract, the clock is ticking. So they're ordering all that right up front, and then we're getting in line for underwriting. As a correspondent lender, we underwrite all of our loans in-house. So we're big enough to have that and also bankroll and fund our own loans, but we're small enough to be local and to have some flexibility. So once we receive what's called a conditional approval from underwriting, that's essentially my underwriter saying, okay, based on this information provided, I conditionally approve this loan. In order to issue the clear to close, I need bop, bop, bop. And it's usually somewhere between 2 to 5 items.
Okay.
Oftentimes it's just an updated bank statement. Maybe we need another pay stub, or perhaps, we need a letter of explanation or something else. Once we have that list, the quicker we get those items turned around, the quicker we're submitting for a clear to close.
Okay.
So as much as I'd love to think what I do is rocket science, I know it's not. It comes down to being organized, planning, knowing the guidelines, knowing your craft, putting in your 10,000 plus hours. But, as long as you do the proper planning ahead of time, there's not going to be or not as many surprises down the road. One of the interesting things in real estate is, when there's so many parties involved, you have an attorney, you have an insurance agent, you have a buyer, a seller, a listing agent, a buyer's agent, a loan officer. There are a lot of variables, majority of which are out of everyone else's control, like the property being one of them, for example. So, it's important to stay ahead of the game as far as pace and speed go, so that if there is a hiccup, something comes up, we've got ample time to adjust and it's not impacting our close date.
Yeah, it's kind of like that pivot. You hit that point where, because that's the thing with dealing with that many people and that many hands in the pot at one time. There's so many uncontrolled variables to it.
Mm-hmm.
There's like the matter of fact, there's the house there, and there's you, and you know what you're thinking, but like you don't know what everybody else is thinking. You don't know if they're diligent, if they're work. You don't know if they're like, if their systems are down pat, or how quick they are to move things through. But I'm sure that you work with a lot of the same people. You said you do a lot of the stuff yourself in house, so
mm-hmm.
I'm sure that helps a lot with cutting back on some of the uncontrolled pieces of it.
It does, yeah. The more variables outside of your control that you can limit, the better. You and I have talked about this with your experience in logistics. I think the more experience you have, the more scenarios you see play out. You're conscious of how to combat those, for lack of a better term. You're like, okay, I've been down this road before. We can go route A, B, or C. And that's one thing that I take a lot of pride in, is I enjoy the problem-solving aspect of it. So if we've got something that comes up, I have a borrower, oh my gosh, I'm sorry, I didn't know that I wasn't supposed to open up another credit card, while I'm in this process, or whatever the case may be. So it's okay. We're keeping everyone calm. There's nothing to be up in arms about. Here's what we can do. We can move forward with option A, option B, or option C. And I will let the consumer be the one to make that decision. Now, they'll oftentimes ask me my opinion on which route I would go, and I'll let that opinion be known. But I'm never going to present a problem to my clients unless I've got multiple solutions for them.
Okay. Yeah, it really comes down to the same with logistics, because, what you're doing is logistics, and like the best way to do it is to have, that does come from experience. Because you have to go, oh yeah, back a year ago I went through the same thing. It's a little different, but there's some similarities to it. We can kind of go down this road instead of that road. I always say with logistics too, I would always say like I'd had plan A, plan B, and plan C, but then you have A1 and A2, B1 and B2, and C1 and C2, right? Because you're trying to like predict or plan for the future as best as possible. So the more things you know about it, and the more people that you're comfortable working with, that can salvage a situation if it happens, is of course the better situation to be in.
Yeah, it absolutely is. And some may disagree with me, but my wife in particular. But one thing that was brought up this morning when you and I met is that perfection is the enemy of profitability. It's oftentimes for me, I think it comes down to setting realistic expectations and letting people know, like, hey, here's what you can expect for this transaction on how this can play out. And I think as long as you do that, and, this can be applied in a number of different professions, don't just tell people what they want to hear. That's going to get you in trouble real quick. Sometimes, like I touched on earlier, I'm not going to stand, on a soapbox or sit on my high horse and act like, I know what's best for somebody that has only talked to me for 10 minutes. But at the same token, it's part of my job to provide them with all the knowledge, all the resources possible to allow them to make the best decision.
Absolutely. So, well, this has been great. I really appreciate you coming in.
No, I've enjoyed it, Joe. Thank you for having me.
Yeah, we'll definitely do this again. I'm sure of course there's tons we can keep talking about. So, but this will give everybody kind of an opening to it, and I want you to kind of let everybody know where they can find you. Yeah, sure.
So, as I said earlier, my name is RobYo Yankowski. The moniker is RobYo the Mortgage Pro, and you can visit my website at RobYoTheMortgagePro.com. That's RobYo TheMortgagePro.com. Or feel free to give me a call at 919-322-8201. But thank you again for having me, Joe.
Awesome. And I'll see you guys soon on some future podcasts. Thanks again.
Thanks, man.
Thank you again for taking the time to listen. I look forward to sharing more with you on future episodes. If you need to contact me, you can reach me at anothernewperspective101@gmail.com. I look forward to hearing from you. Have an awesome day.